Welcome back to Golden Rule Radio. For weeks, we've been saying the gold is stuck in a range between 1170 and 1210, and it's still there.
Thanks for the update. We'll see you next week.
All right. Why don't we talk about unobtainium today?
Well, sure. I mean, we mentioned rhodium last week. Rhodium, the $600,000 to $10,000 metal. I'm sure most of you gold and silver guys would like to see the same type of movement that direction as well. But on some pretty interesting news today, which we will get into on the heels of Hurricane Michael and what's going on in the equities markets, which we'll touch on here in a bit. But starting out with gold and ending with gold pretty quickly, we're just waiting for that breakout one direction or the other. So what are we seeing in the other metals, guys?
Well, I prefer the breakout to be to the upside and have the white metals lead the charge. That's when we know that people will finally wake up to the realities of inflation. And you know, tough to predict in these markets, though, especially when you have the stock market volatility that we're seeing, and the dollar really doesn't know what direction to go. I don't think the world currency market knows which direction to head. But, you know, before the show's over, we'll touch lightly on some of the Chinese trade stresses as well. We've seen silver hanging around the low $14 range, $14.35 on the ask today, and that ratio corrected down from 85 down to 82 in the last 2 weeks, and it's just holding steadily. So as of this point, the white metals aren't leading the charge.
Well, certainly silver isn't, but you look at platinum and palladium. I mean, palladium is still holding up. I called a couple weeks for a pretty big sell-off in palladium. That is not happening. So we'll call that a bad call on my part thus far, unless we do turn down. And platinum's at the top of its range and flirting with possibly breaking higher. So we could see a little bit of split personality in the white metals. Silver, I still think is stair-stepping down before it turns up. And I agree. I think they lead the charge. I think this is an investor's market as far as where those prices are going here in the U.S. That's not the same story when you go to China or Europe, like we talked about last week, and the increased European buying in gold. And that's certainly not the same thing, like I mentioned, in China or India. So it really is just what's the average American investor doing. I mean, the mining shares are down. The metals are sitting pretty stagnant here. And it's been nice to see the equity market go up until this past week. But yeah, I completely agree. I mean, something's got to make a decision.
When you're talking about a geopolitical hedge, though, Miles, I think that's where gold does best. And so, you know, from an inflation standpoint, if we go back to the fundamentals, the white metals aren't going to lead the charge until everything looks a little bit rosier and you do get some of that runaway inflation concern, in my opinion.
That's exactly what happened the last time.
So you're seeing gold up today, white metals down a little bit, and that's just gold saying, look, I'm still the king in terms of global monetary and fiscal uncertainty, market uncertainty. You know, the hurricanes may be adding a little bit to what we're seeing today, but to me, this is when gold is the boss. Before we leave the white metals, Miles, you know, you're talking about platinum and palladium still looking strong. On the Commitments of Trader report, on the futures market, palladium is the one that has a net long position in the futures market. So that is a gutsy call on your part. Don't expect an immediate reward for it, but it may continue to have a little bit of strength here according to the futures market.
Sure. Watching the metals is like watching, oh, look, that paint is drying on the wall. But the big news this week is the equities market.
Yeah, Robert, it looks like somebody put a little too much paint on the wall because the Dow's definitely dripping down here. I think we're down about 1,350 points since last week, 850 down today, which that used to be a really big number when the Dow was like 7,000, but now at like 5 billion or wherever the Dow is these days, 800 points doesn't really feel like a lot anymore.
Well said. Thank you. But what's the real story?
Well, that's 5% down. You know, everybody's numb to a 5%, you know, we've been calling for a 10 to 15% retracement, and we're now half to a third down in just a matter of a couple weeks, you know, flirting with crossing 27,000, can't quite make it. Now, all of a sudden, blink of an eye, we're below 26,000.
That's good, and I think the NASDAQ's been getting hammered a little bit harder, right?
Yeah, the NASDAQ's definitely taking a beating today, and I think a lot of that does have to do with the information breaches and then the reliance on the tech sector and Google Plus getting shut down, not that anybody used it to begin with. Couple that with Facebook, a platform everybody uses, and their data breach here recently, and accounts getting picked off. I'm just about at the point, if I didn't want to look at everybody's kids and grandkids, which, let's be honest, it's us in our 30s and 40s that actually use Facebook these days to communicate with our parents. So I'm just about at the point where I'm going to get rid of that if it wasn't looking at the cousins growing up.
Well, speaking of data breaches, at the beginning of the show, when we started about a year and a half ago, we started talking a lot about data breaches into the banking sector. I think it's an inevitable thing that we're going to face sooner probably than later, is that we have people that hate our culture, hate our society, and they're not going to stop coming after us in a way that is not bringing in ground troops onto our border. They're going to come after us through the tech sector and probably through the financial tech sector.
Well, and it may not even take that. I mean, we've got people in this country that hate our culture and hate our society and are willing to do just about anything they can to bring it down. I mean, we were talking earlier, I know that the divisiveness between conservative and liberal is getting pretty aggressive these days. And seeing how that's playing out on the political sphere over the last couple of weeks. We did mention the Brett Kavanaugh thing, although we did try to steer away from it a few weeks ago because it was the only thing you could see on the internet. So seeing how this has been playing out, conservatives versus Trump, liberals versus
Trump.
So conservatives versus Obama, I meant to say, liberals versus Trump, and just kind of watching how that's been playing out here for a bit. It's you throw in a couple hurricanes and a collapsing stock market and a dollar dropping to 82 and gas prices going to 350 and the trade war. You start coupling all those economic and financial things on top of the political and geopolitical. We could have some serious problems around the corner.
Well, and one other one, Miles, is the end of the quarter. So we've got the end of the fourth quarter with the federal government, and those numbers starting to roll in here soon. We've got the end of the third quarter. Corporate America now is reporting its profits or losses or concerns and outlooks. And so it's shaping up like an ugly quarter. And what we're seeing, even, for example, you use the paint on the wall analogy. Look at PPG, the Pittsburgh-based company, huge conglomerate industrial coatings company. And they're experiencing rising costs, slowing Chinese demand, higher inventories, strong dollar eating away at foreign sales, higher oil prices driving up their cost of goods that they're turning around to sell. So this may be something that we've got to have our eyes on, that this could be shaping up across America corporately.
So as the fourth quarter does shape up to look like it could be turning negative, what else is going on in the world that you see?
Well, I heard a great quote. The plunge protection team is working so hard to discredit gold, something awful must be coming fast.
Sure. I mean, we talked about Poland last week. Now we've got Egypt.
Egypt buying, right? You've got India buying on top of Poland. These aren't normal central bank gold acquisition positions, right? This is something over $13 billion of a hoard building here that is telling you that they feel there must be falling stock markets and rising inflation on the horizon.
You could see evidence of that in the yields rising in the U.S. bond market.
You can see evidence of it in our company where we're not doing mass liquidations. People might get disappointed that the plunge protection team has been effective at suppressing the price of gold, but we're not seeing a mass exodus. People aren't dumping their physical metals.
Yeah, so we'll definitely be watching how the Dow responds here. I wouldn't be surprised to see a bounce up tomorrow, but if we continue down and we have another pretty massive down day later this week or early next, that could be pretty telling. Robert, you did say something a second ago I don't just want to gloss past, and I think it's something that we need to talk about, maybe not today because we're running out of time, but next week or the following week, and that's the idea of yield rates. Its potential with the Dow losing a bunch of ground, the European Union seeming rather shaky, other countries picking up pretty substantial positions in gold compared to what they have done in the past. And with the U.S. dollar and interest rate going up, pulling yields up and making bonds less attractive, it makes you wonder where people are going to run to if we have an equity unwinding. You can only pull money out of the credit market for so long to pump prices up. Granted, that is the majority of what the Dow's made up of, but we do have a number of people, especially retirees or even people our age who are just trying to put their savings away for that retirement age down the road, who are trusting in an equities market for substantial positions. So I'm starting to get nervous here, and we've been talking about it for a year and a half, and it's been off in the distance. But when you see things like this take place and you look at your other options out there, it makes you wonder, what is the average American going to run to? Because we all know, because we saw it in 2008, a good percentage of people will get into metals, get out of the equities market, will make a little bit of money, save themselves from traumatic losses. But the majority of Americans don't. The majority of Americans will ride that down to the bottom And I just want to know, what does that end up looking like when you don't have another alternative?
Your alternative is gold, and that's what it has always done. And we should go into some detail on the rates next week. But I want to point out one other thing that you guys had mentioned a couple of months ago, and we were talking about the seasonal trends in the precious metals being strong in the fall. In the last 17 years, there was 1 year that bucked that trend.
Right.
Correct me if I'm wrong here, right? And it was 2008.
Correct.
Yep. Well, is this not shaping up like a 2008 again, right? Because we're looking at, and I'm not saying that because the Dow and the NASDAQ are getting hit hard today. I'm not saying that because there's a hurricane. I'm saying that because of what you've been talking about, Miles. And those yield rates to me are huge. But the fact that if this continues and the stock markets really do correct here, this could be the first domino.
Well, before we leave, I also want to point out that the dollar is coming into this range where Miles pointed out, I have been kind of the champion of the dollar on this show, winning a little bit of the bets, going down first part of the year, coming back up, kind of hitting some good targets here. I have to say that I've been having a good track record on the dollar.
You're absolutely right, Robert. It's like that first time your kid beat you in basketball. And then he reminds you for forever. Yeah. But
so
sorry,
where's it going? Let's
I'll
put him on the spot, Miles. Let's put him on the spot. Where are we going?
We're at a pivotal point with the dollar. I'm not going to say we're going much higher. Not going to say this is the turn that takes it down. But you're at a point with the dollar. Miles pointed out a week or so ago that the dollar is forming what could become a massive head and shoulders topping pattern. It's also coming into the trend line that we pointed out as it broke down about a year ago. It's coming back into that trend line. So Miles is going to draw this on the chart for you. This is something to watch. This is going to be pivotal for gold, the euro, all the other markets. The dollar is still king. Whichever way the dollar goes from here is going to be the next major trend. It could be reaching kind of its last little gasp before it heads down in a major way.
The dollar is still king, and we'll call you King Dollar until you're wrong.
So that's going to do it for Golden Rule Radio this week. We thank you all for tuning in. If you have any questions, you're welcome to give us a call anytime at our phone number, 1-800-525-9556. Head on over to Twitter at ICA Gold or follow us on Facebook, McElvaney Financial. Thanks for listening. Have a great week.